Hello, today is Monday, November 4th, 2019. I'm Joe Schmidt from TC2, and this is Staying Connected. On today's podcast, I'm joined by my fellow TC2 colleagues, Theresa Knutson and Julie Gardner, leaders of TC2's contract compliance and optimization practice. What we're going to talk about are some of the challenges faced by enterprise users when trying to manage transport expenses. Sadly for the enterprise, these challenges are becoming more complex. So we're going to make this a two-part podcast so that you get the full benefit of Theresa's and Julie's descriptions and examples. Theresa and Julie, thanks for joining me today. And Theresa, let me start with you. You mentioned to me recently that there's a newer issue that the two of you have been seeing related to credit balances on accounts. What does that mean, and how would an enterprise identify it?
Hey, Joe, and thanks for welcoming me this morning. This is an issue that both Julie and I are seeing with increasing frequency at our clients, both those that use a third-party telecom expense management company and those who still manage their invoice processing in-house. So what happens is when a credit is issued, regardless of what the credit came about, the vendor posts it to one or more of your accounts. So that's simple enough, and you're thinking, how could there be problems with this? But here's where things go awry. The typical accounts payable process is to pay current charges due each month, not the net balance due on an account. So you can identify these situations if you look at an invoice and you see the current charges are higher than the total due on an account. So an example, the current charges are $500,000, but the total due is $100,000. The default AP process is to pay the $500,000. So the issue of credit balances has become more and more pervasive, as it's really common to have annual or semi-annual credits in large enterprise deals. So this, coupled with credits from the resolution of billing disputes, are things that can create large credit balances on accounts. And these credits don't automatically get applied to your current balance due, and they can end up sitting on your accounts for a really long time unless you give specific instructions on how these credits should be utilized.
Yeah, Theresa and I are currently working on a Fortune 500 audit project, and on one single account, we found a $400,000 unapplied credit balance. So the TIM that was processing the invoices for this customer was doing exactly what Theresa said. They were continuing to pay the current charges due despite the credit balance. And to make matters worse, the current monthly charges on the account in question were about $20,000. The credit balance was $400,000. That means it would take over 20 months for the client to absorb that credit. In cases like that, we recommend that you ask the vendor to move the credit to another account so that you can accelerate your timeline to absorb. If you don't have an account that's large enough or another account to do this, you should request a refund check. And again, to identify this situation, just look for any invoice where the current charges are more than the total due on the account.
So how does someone determine or find out if this is an issue with their company?
Well, you can ask your primary vendors to give you a list of all unapplied credits on a regular basis. So if you meet with them quarterly or monthly, ask for that report. And you may find, like many of our clients, that number is actually quite large. And you can also ask your internal accounts payable department to produce a report of all accounts that have credit balances. Then you need to work with your TEM or your internal AP department and the underlying vendor to actually develop a resolution plan to take advantage of those credits. You can either pay the net charges due on an account, move the credits to other accounts to fully absorb them, or if those two situations don't work, request a refund check.
Yeah, absolutely. And mark your calendar. Make sure you're doing this type of review on a regular basis. Now, how often you do it is really going to be based on the size and complexity of your environment. You can do it either quarterly, as Theresa mentioned, or at a minimum, do it annually. And be sure to check for credits on all of your accounts, including inactive accounts and your local accounts. With the migration over to SIP services, many of our clients are seeing large credits on their local service accounts. It's important to ask your account team to include any ILEC and CLEC credits. Those are your local account credits, and any credit balance reporting that you request from them. Because these types of accounts generally use different billers, they may not automatically populate on the canned report that your account team may run for you. So make sure you ask for those specifically.
Yeah, and another thing you can do is to help manage the issue by getting in front of the credits and giving your TEM or your internal AP department a heads up when larger credits are expected. So if you have an annual credit coming every January 1st, make sure that the account teams know about it, your internal AP departments know that it's coming, and they know what to do. So I typically include the credit amount direction to the TEM and tell them which specific accounts to apply it to. And again, you also have some latitude in moving credits to other accounts, but the directions that you give must be prescriptive. Okay, I want 100,000 of this $1 million credit to be applied to this account. I want the remaining balance to the next account. So giving that prescriptive direction will allow you to take advantage of those credits quicker. I also include the finance teams from my clients to make sure that they know that those credits are coming so they can forecast the impact of those credits into their budget, into the forecast. So this is one of those things, if you aren't really looking for it, it's likely happening, and it's really worth a look to see what's out there and to take advantage of any unapplied credits.
Yeah, absolutely, Theresa. And important working with your finance team as well, because if the vendors just arbitrarily move the credits, they're not going to put them to the correct cost centers. And that can cause an issue for you with your budgeting and your forecasting. So make sure finance is plugged into that process. But as you can see, understanding and managing the process are important for the success of both the client-vendor relationship and your client-TEM relationship. Theresa and I have some other billing issues that we want to describe, but we're going to cover those in our next podcast.
Okay, thanks, Julie, and thank you as well, Theresa. If today's discussion has you wondering if maybe you have some unused credits sitting on your invoices, or maybe you have other billing issues you'd like to discuss, you can contact Julie, Theresa, me, or any of our TC2 and LB3 colleagues by giving us a call or sending us an email. If you'd like to stay current, you can subscribe to Staying Connected on a number of platforms, including Google Play, YouTube, SoundCloud, iTunes, and Spotify. I also encourage you to check out our new TC2 and LB3 websites or follow us on LinkedIn.